This is CNBC's live blog covering Asia-Pacific markets. Asia-Pacific markets were set to fall after producer prices in the U.S. grew faster than expected in February, coming in at 0.6% last month. Excluding food and energy prices, core PPI climbed 0.3% in February. Economists polled by Dow Jones had expected a 0.3% gain for headline PPI and a 0.2% increase for the core reading. Investors in Asia will be watching out for any news from Japan's spring wage negotiations, with first estimates expected to come out later in the day. Japan's Nikkei 225 was set for a weaker open, with the futures contract in Chicago at 38,355 and its counterpart in Osaka at 38,330 against the index's last close of 38,807.38. China's central bank will also be in focus, with the People's Bank of China expected to keep its one-year medium-term lending facility rate unchanged at 2.5%. Futures for Hong Kong's Hang Seng Index stood at 16,798, also pointing to a lower open compared with the HSI's close of 16,961.66 in Australia. The S&P/ASX 200 fell 1.28% to hit its lowest level in about 3 weeks. Overnight in the U.S., all three major indexes lost ground as the hot inflation report sent bond yields higher, with the benchmark 10-year Treasury adding about 10 basis points to 4.29%. This put pressure on equities, with the 30-stock Dow down 0.35%. The Nasdaq Composite fell 0.3%, while the S&P 500 slipped 0.29%. CNBC's Brian Evans and Lisa Kailai contributed to this report. Crude oil futures rose on Thursday, adding to the previous session's gains as the International Energy Agency now forecasts a supply deficit for 2024. The West Texas Intermediate contract for April rose $1.54, or 1.93%, to settle at $81.26 a barrel in U.S. crude's highest close since November 2, 2023. The Brent contract for May added $1.27, or 1.51%, to $85.30 a barrel. The move came after the IEA forecast a slight supply deficit for the year rather than a surplus, as the organization assumes OPEC Plus will keep its production cuts in place through 2024. The cartel's cuts of 2.2 million barrels per day are officially in place through at least the second quarter. JPMorgan Chase slipped more than 1% Thursday after the Federal Reserve announced the bank was fined almost $350 million. The central bank said JPMorgan was hit with $348.2 million in fines by a pair of U.S. bank regulators. The punishments are tied to a program to analyze firm and client trading for misconduct that has been deemed inadequate. Despite Thursday's slide, shares of the bank have climbed more than 11% this year. Alex Harring, Reuters. The producer price index rose 0.6% in February. Core PPI, which strips out food and energy, gained 0.3%. Economists polled by Dow Jones expected an increase of 0.3% for the headline number and a 0.2% advance for core PPI. It marks the last major data release before the Fed's meeting on March 19–20.